Welcome to anyone live on the webinar, and welcome for everyone on the likes of YouTube. If you've come on YouTube and you've stumbled across me and you like what I do, make sure you click the subscribe and like button. And if you're on YouTube and you want to understand trading and you have no idea where to go, in the description there is a link to my free course. And if you want to jump in our Discord chat room, you are more than welcome to jump in on that as well. The more the merrier. We have a chat room of 500 traders chatting, talking, looking at what they're doing. So yeah. I'm assuming everyone can hear and see my screen. Is everyone in on the chat? Todd, yes, and yes. Good. Good. Avignon, Lisa, Todd, Boyan, Cassie, Mark, Wayne, and everyone else that's on there. Obviously not going to go through everyone. So we're gonna sort of crack on. So this is something that we talked about quite in depth over the last couple of weeks, is Tesla. So Tesla is one of these ones that has just sort of gone on from strength to strength. And it is just one of these stocks that just continues to obliterate any preconceptions people had about anything. So I'm going to pop a horizontal level down here, because that's where my entry was. My first entry on Tesla was actually a slight bit higher. It was about there, or maybe a fraction higher. So that was my first entry on Tesla. Now, on this particular run here, I actually jumped in. I think it was somewhere on the way down there. I think it was around here. I got a second entry into it. So it was one of those ones that I am in this momentum to the upside, but I've been in it for a little while. Now, as we talked on the last webinar, there was a couple of plays that we were looking for on this particular stock. Now, we had this little bit of a run here beforehand. Then we had news announcements coming out. So we had 2 days of movement that hasn't really gone anywhere. And these were the two plays that we were looking for. Now, the $900 mark was a huge level because it hit its head before and rejected. And the big news was down here. Look, down here is that they surpassed, they surpassed what the expected earnings was. Okay, so the expected earnings was 1.62 and the actual earnings was 1.86 per share. Now that's a huge jump for anyone. So that means that their financials were 15% better than expected. So like I said on the last webinar, if it's anything between 10 to 20% higher, the earnings, we expect this to jump. If it's under about 10%, we expect it to bounce off this $900 mark. And that is exactly what's after happening. We've had this massive run at the minute. We've had this earnings, which has been massively profitable. Now, even though the Shanghai factory is not doing a whole lot, even though we've had a global chip shortage, even though we've had a global delivery shortage and all that sort of crap going on at the minute, he still has outlaid cars. Even with what's gone on, there's just been more and more cars, and they actually had a record delivery on cars in this quarter. So well done. Now, what I do not want to see people doing, is jumping in right here. I do not want to see anyone taking a trade on this today, tomorrow, the next day. We do not trade this till this comes back down here. Okay, so I'm going to delete this line because we don't need that one anymore. We need this to come back into this area, or even back down to this area. Either of them needs to come back to one of those places before there's value in this stock again. Now, how many people have read that Tesla is massively overvalued? How many people have read that? We've all read it. We've all read it. Everyone that has ever picked anything up. So we look at this net income versus revenue. So the revenue is 35 billion. The net income is only 700 million. So they only have a profit margin of 2.19%. That's shocking. From 31 billion, you've only made 700 million. Shocking. But the idea is that we're looking for long-term growth. We're looking for okay, so really good question. Thomas said, yeah, that even he said the stock was overvalued. Of course, but he's not stupid. So why does it keep going higher? Well, one, because people trade it. People trade it. It is when my time at eToro, it was by far for that year the highest traded stock in eToro, bar none. There was no other stock able to touch it, which means that I hate using the word volatile because as a trader, I'm looking for volatility, and volatility just means movement. I want movements. So that was what I want. I'm looking for movements. I'm looking for the market to go in a particular direction. So, so the idea is there's just massive movement in this. So, but the thing about this is that we're betting on Elon Musk. That's what we're betting on. We're not really betting on Tesla. We're betting on Elon Musk. Now, Elon Musk, I don't know if anyone ever read his book. He is an absolute superstar out there. He's probably the modern day Steve Jobs. Unbelievable. Anything he puts his hand to generally turns to gold. Why? Because he works 16 to 20 hours a day. It's just that unbridled, oh, it can't be done. I've read his book. He sacked more people who said it can't be done. All right, cool, perfect, goodbye. I will get someone else in who can. Simple as that. If it takes long, then it takes a bit longer. But as long as it's done, he doesn't care. And that's a single-minded attitude about the likes of this. And that's why he's gone on from strength to strength with the companies that he's sort of invested in and gone on from. So what we're doing is we're investing in Elon Musk himself. We're also investing in the technology that he has, the technology, the patents that they have. We're also investing in that they're the first to the market. And look, just to give you another idea, this is also why we're investing in Tesla. Because we look at Tesla, look at my first position, the third 2020, okay? Third 2020. So this is 1 year and 7 months, literally to the day. 835% up on my original position. I have also part closed this position, which meant that I took the original money out of it. Okay, so I also took 270 quid out of this. So that technically should be 1,400. Well, if I had left the trade alone, that would be 2,264 quid. Okay, that's literally the bottom of the pandemic. Bottom of the pandemic. So that's why we're investing in it, because this has skyrocketed. This has gone. Okay, my other position has brought this down a little bit, but we're looking at it, and it's simple enough. If we look at there's a what was it, 135 quid invested, and I'm look up here, this 1,100 quid. Now people then go, oh Henry, why didn't you invest more? Because it didn't meet my rules to invest more. I risked at that point, I risked 2% of my accounts rather than 1%, because like I said, I invested here and I saw the growth to at least here. I saw it going from here to at least here. So I put 200 quid in, and look where it's gone now. Did I see that happening? Absolutely not. Do I expect this to continue going? I do. I expect Tesla to continue going, but we have to have some sort of pullback. We have to have some sort of comeback on this. So Cassie just said there that Michael Burry is crying over his shorts. Now, Just bear with me for a second. So Michael Burry's short on the likes of this, it comes down to the likes of puts, options, and carries. Okay, so I don't know whether anyone ever saw the big short. Now he made 450% on his trade from the big short. But in comparison, the cost of the trade that he was holding on, and he held on to the trade for 3 years. It was overall over 3 years, it cost him 17% of the fund. So he was wrong for 3 years before he became right. So even on Tesla here, he may be wrong, but if he's wrong, it's only going to be a marginal downside for him. He's not trading it as a CFD as we are, that if it goes up, he's losing 5 times every time it goes up. There's a contract on it. When it expires, and when that contract expires, then there's a new contract to play. So it's a very different type of trading to the one that we actually do. All right. So he may be shorting it, and he may be massively offside, but it will only be a small percentage of his portfolio if that is the case. And who even knows, he may even got break even or even got out of the trade at this particular point. So this is the thing with the likes of Tesla. So there's lots of upside in this. Yeah, and also as Hertz have bought 100,000 units of Tesla. Okay, which is huge for Hertz, but it's also huge for Tesla as well. It's the one of the first big manufacturers have come in and said, look, okay, you've got your shit together, let's do this. Yeah, Musk is now richer than Bezos, and he is, but again, it's paper money. It's paper money because if you look at this company is not massively profitable. It's only minuscule profitable. So don't be sort of fooled by that he's the richest man in the world. On paper, if he sold his companies, yes, he's the richest man in the world. But cash is not. Yeah, absolutely. Marcelo is, do not confuse net worth with cash in hand. Completely. Yeah, absolutely, Mark. Again, Tesla have production issues, not demand issues. 100%, absolutely 100%. They need to get their production issues sorted, but because they do sort of everything in house, that's why it takes so long. But again, that is also the reason they're able to keep sort of costs down and they're able to innovate, because instead of going out to other companies or companies just wanting a conveyor belt or the likes of Ford production line, that they can actually innovate and they can tweak and stuff themselves. So that's the thing behind it. Okay, so I want to have a look at the trade that we placed last week, which is Gazprom. See what there is. So Gazprom. So we took this last week here. We had a nice little jump today. A nice little jump today. So we've had 1.8% movement today so far. So this trade is running quite nicely. Arista percent about 0.75% up at the minute. So it's running nicely. We had talks between Putin and Europe, and the talks seem to have come out pretty positive. And we've seen a little jump on the likes of this. We've seen a little jump on the likes of natural gas as well yesterday to the upside. And today we've had a little sort of sell-off, but I'd expect that to continue going. I know some of you guys from the Tuesday webinar or the Wednesday webinar actually jumped in on this. And if you jumped in on this, you would be a 1-to-1 up at this high. Well, actually, a 2-to-1 up at this high. So anyone who jumped in on that, let's see what the 3-to-1 is. So that's 7.237, 21, 21. Yeah, about there. So we have you jumped in, posted it, but didn't take it. But again, this for me is not a trade. So even though this trade here, this is not a trade for me. Look, it doesn't come back to our trend line. It's in no man's land. It hasn't come back into this blue box. So for me, this is not a trade that I would have taken. It does not meet my rules. It does not meet my rules. It's hanging in no man's land there. So it's not a trade that I would have taken. So for this reason, I did not take this trade. Also, I don't over risk. So I'm in Gazprom, okay, which is effectively the same as natural gas, isn't it? Yes, it's a company instead of an actual market. But if gas is doing well, isn't it correct to say that the likes of Gazprom and the other companies will do well as well? So that's why I didn't take natural gas, because I took Gazprom instead. Okay, so we actually have a nice little jump on that. I would expect some sort of rejection at this level. I would expect some sort of rejection there. Absolutely. I 100% expect some sort of rejection there. That's 40%. Why did I put that up there? 3.7 is 21. Yeah, sorry, I knew that looked absolutely shocking. So there's somewhere around there is the take profit. I think that 21, 21.8. 3.7 is 21, 3 is at 6. Yeah, so about there. Perfect. So for me, if I am someone who is looking to trade this and jumped in on this trade here, I would be taking profits slightly inside of that. Or if you're someone who expects this to continue going, I would hard close my trade here, just inside that. So if I bring this down, I would probably have my take profit about there, just inside that high, which means then I'd either be closing my trade completely at that point, or the other option is that you hard close the position, move your stop loss inside break even, and then let it run and see if it continues to run. Happy days. Unbelievable. And that's the idea. So we're supposed to be letting these trades run. We're letting them run, letting them go, looking to make money on them, and letting the market do the heavy lifting for us. Yes, we have losses. Absolutely, we have losses. And we have losses all the time. But again, I have about a 54 to 57% success rate, depending on what platform I'm on. And then the wins take care of themselves then. Why? Because the losses are small. And that's it in a nutshell. That's what we're looking for. We're looking for it to slowly run. If we look at the idea of this is that we try to avail of what's going on in the market. Let the market run, and we just jump in on it. And that's what I'm trying to get across to people. Also, the likes of eToro or Naga. So we have 3 trades on Naga at the present moment. I have Palantir, so that's the very, very first trade I ever took on. Very first real stock I took on Naga, and I was just to find out how it actually worked out. And if you see RE, so if you're trading on Naga, if you see RE, that means you're buying the underlying stock. Anything other than RE is a CFD. Okay, so you will see. Now, one of the things here with the likes of Naga is that you have to buy the physical one share. Okay, you have to buy one physical share. So if we look at this, we can see that even though I'm only up £2 on the likes of Palantir, it's actually 17% up. If I look at Nike, because Nike's £109, I'm up £11, I'm up 10%. If we look at eBay, it's £51, I'm up 7, which is 14%. And then this one, it's a CFD trade. So if I click on this, I've risked £100 on my trade. Okay, so my stop loss is £100. And my take profit shouldn't be 123, it should be 300. So I will change that. So it should be that. Now this is a CFD trade. So if we go back to my trades here, we can see that 34 quid up on it now at the moment. Now, if you're wanting to jump in on the likes of Naga, please let me know. And then you'll be under, make sure you click on the link, you'll be under the account manager. Now, what I do is I run free trading days every so often because these guys sponsor free trading day for us. They've given us a budget for you guys. So if anyone signs up, let me know. Make sure you follow the link. And the more of you guys that use this link and sign up and use Naga, the more free stuff we'll get for you guys. And that's just the way it is. So I don't mind whether you use them or you don't, but if you do, make sure you let me know or follow the link and don't click off it, because the amount of clients I have that have signed up to it and then they haven't clicked on the link, which means then that I'm going to them and going, well, this is our client. They're going, well, they didn't follow your link. And I'm going, well, there's not a whole lot they can do about it. When Henry will, not we can do, we have to give you a budget for, say, the 10 people that signed up instead of 20 people who are actually signed up. So yeah, that's the idea of it. So just make sure if you do and you want to be part of the group and the free stuff, just let me know and we will get you in on board. Okay, so let's have a quick look at Starbucks. Make sure that has still got some room to go. Starbucks. Now, Starbucks, this was the entry. It was off that horizontal level there, bounce, 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 bounce. And entry was here. We got in on the entry on this green bar. So on this green bar, we didn't get in on this one. We got in on this green bar. So the entry was above it. Stop loss was below the low. And we are now running at the minute. It hasn't quite hit a one-to-one as of yet, but there is 3 threes is 9. So it's actually a little bit higher, 9, say 10%. So there's a take profit on it. And the good thing about this is we're inside the previous high. So our take profit is inside this previous high. So at the moment, this is running quite nicely. We will have earnings coming out very shortly. So we have earnings coming out on the 28th. So in 2 days' time after the market closes. Now, what I would say is for anyone who is in this, what you could do is look at move your stop loss to break even. If you think that the likes of the news is going to be negative on this, because this is a CFD, it's completely different to trading the underlying asset. You could move your stop loss to break even, but do a little research beforehand and see what is the expected earnings. Are we expecting earnings to be good? Are we expecting earnings to be bad? This is the only time where I allow people to manipulate trades that they have running already. If we see the market open, it's slightly higher on the pre-market at the moment. So we're expecting to open a fraction higher. So that's the only time I sort of let people mess around and fidget with trades that they have opened. Whether it's you close the position and move your stop loss to break even, whether you close the trade fully, or we get lucky and what happens with the likes of with Tesla happens here, that it's up 10 or 15% and then we get a gap to the upside. That would be really nice. That would be the ideal scenario. Now, also coming up, dividend. Okay, so does everyone know how dividend affects a trade? Can anyone tell me how dividends affects a trade? Anyone at all? Or well, how do you think dividends would affect our trade? Can anyone come up with the right answer? People bail out of it. Well, if we look at this, the dividend is only 0.49. So it's not like there's a massive dividend on this. It's not like there's a huge dividend on the likes of this. So can anyone tell me? I've had one correct answer so far. Okay, so dividends. What happens with a dividend is generally the price drops lower. Okay, why does the price drop lower? Because they are paying you out. Just say the market is, just say for instance, and I'll draw it out for you. Okay, so just say for instance with dividends. Let's say the market closes there. So just say the market closes there. Okay, so that's where the market closed. We've had a nice big green bar, and it's like this, and the market closed right there at the top. Now, just imagine that this is a 2% bar. Okay, so that is a 2% of the overall market. It's 2%. Now, and just imagine the dividend that is paid out is 1%. Okay, so it's paying out 1% dividend. So Henry Ward stock is after having a 2% day, and now tomorrow it's paying out a 1% dividend. Now, what will happen is the stock generally drops 1%. Because theoretically, the 1% that you get paid, isn't that wiping 1% of value off the stock, isn't it? So which means then that the stock will drop 1%. So that's the idea. The stock will drop 1%. So what happens then is that the stock is a little bit cheaper. So the stock is a little bit cheaper. And then the idea is that what we would like to see is the next day at least having a 1% move. And hopefully then it goes on and has another 3% move. Okay, that would be the ideal scenario. Okay, now what a lot of people do is they jump in before. So you have X dividend date. So I'll explain what an X dividend date is, and you have dividends. So what an X dividend date is, that is the date that the company says anyone who holds this stock before the X dividend date, you will get paid the dividends on this day. So just imagine that the 26th is the X dividend date. Now, if you own this stock on the 26th, you will not get dividends. You have to own the stock on the 25th before the market closes to be eligible for the dividends. So the X dividend date. So you have to buy it on the 25th before the market closes to qualify for the X dividend date. Okay, so if you have it on the X dividend date, and now if you get rid of it on the 27th, you still get the dividends. So you can buy it on the 25th, hold on to it for the 26th, sell it on the 27th, you will still get the dividends on the dividend date. So just say the dividend date is the 10th, okay? So you will still get your dividends on the 10th. So that is how dividend works. So the idea is if you're trading a CFD, all right, so you're trading a CFD. So you have a CFD, okay? Now, one of the things with a CFD, and you're buying it, so you're expecting the market to go up. And you have a 1% dividend, what we have here, and you're using leverage X5. So what do you think then happens? What do you think happens then? So if we're using CFD, and I know a lot of you guys trade eToro, so you need X5 here. What do you think happens on that date with that dividend? So one says that it's multiplied by 5. One says you don't get dividends. Everyone gets you get the dividend multiplied by 5. So you get the dividends multiplied by 5. which is 5%. Now you might say, oh, that's brilliant. That's brilliant. Absolutely, that is brilliant. Okay, so using leverage X5, okay? So you might say, that's brilliant. I might jump into that and then just before the dividends, use leverage and then the market goes in that direction. But remember, we said that the stock drops 1%. So the dividend gets paid into your accounts by X5. But remember, the stock drops then 5%. So your P&L, as in your bank balance, has risen by 5%. So just say you have 100 quid and you've made 5%. So now it's 105 in your available balance. And this trade was 100 quid up. And then it drops by 5%. So that could be then down to 95 quid. Okay, so you get paid in your available balance, but then it takes away from the trade. Okay, so it actually pays for itself. So it's sort of one takes away from the other. So theoretically, you could short a stock on the dividend date. Okay, so then, all right, so we'll do the maths there then. So you're now looking to short a market. Okay, so you have the ex-dividend there. So there's a 1% dividend going on. And you're using X5 to short the market. Equals 5%. So that means you will get charged 5 times the dividend. So in your P&L here, in your bank balance or your trading balance, you will get charged at 5 quid if you're trying to short it. So you get charged -5. Now you're shorting the market, which means then the market drops by 5%. So the actual trade balance, so it's over here was 100 quid, it's now 105. So remember, the reverse happens. So trading a dividend, unless you're buying the underlying asset and then holding on to it till it recovers. So when you're trading a dividend, you have to wait for the market to get back to that level again. And once it gets back to that level, then you're in profit. So that was the 1% drop here. So it has to get back to that level. But if it goes above it, then obviously that's extra profit. But again, remember that it's dividends. If you're trading on a CFDs, it'll give to you in one hand, it'll take away on the other. And it's the same with buying and selling the dividend. It really makes no difference, because if you're buying it, you then make the dividend. But remember, the market drops. So you're making the dividends here in your cash flow down here, but then you're giving it back here on the actual trade itself. If you're shorting the market, it will take 5 quid out of this cash flow here. But what it will do is it will add it then to the trading balance, because it's now dropped that 1%. Okay, so remember, there's no winning or losing on the dividends here. It's just that it is jumped in a particular direction. So don't be afraid to see if the market drops on that dividend date, that all of a sudden you have now dropping on Henry. How's that? What happened there? Why did that jump so much? Well, your available balance will have gone up the same amount of money that has dropped. That's all. So did everyone know that? See, these are the things that I assume everyone knew this. This is stuff that you guys have been trading a little while. This is stuff that I assume that you guys know. Oh, well, I've all learned something. Well, Lisa, I knew that because you're quite new to it, but some of the other guys, they've been trading for 2 or 3 years. I just avoid dividends. But again, to me, it's just an added bonus. It's an extra little bonus. It's an extra little bonus on the thing. So that's I don't necessarily go looking for dividend. For me, you have to go and have a huge amount of money in your trading account. Now, some people will say to me that 30 grand is a huge amount of money. To me, that's not a huge amount of money at all. Okay, but some people will say that's a huge amount of money. For me, anyone who is trading dividends, you at least have to have £100,000 in your trading account, because look at fees here. Look at the fees. This is an easy way of getting dividends on eToro. And if you haven't got a fees here, you just go to, because they've changed everything. I think it's this one. Yeah, so see that little sort of sprocket there? Click on that. And this drop-down menu, you won't see fees here. So click one of these and get rid of them. So just say, for instance, average open or invested or P&L, whichever one that you don't want. So just click on it, just say average open, click on it over here, and then you should see fees here. If you click on fees, then press apply, it will save it. Now, fees is, okay, fees is fees. So if you're in a CFD, it'll be in the minus, but if you have the underlying asset, you will see it. So yes, on Apple, I'm up 173%, but it's made me 15 quid in fees. So it's made me 15 quid in dividend. Microsoft has made me 18 quid in dividends. So that's the thing there. Now you can see that some of these give us good fees, some of them don't. It all depends on how much you have in it as well. So if we go down here and have a look at the CFDs, so look, Gazprom has charged me 5 quid. I'm up 86 at the moment. So it's charged me 5 quid, while the market's been pretty flat. Morgan Stanley, okay, I'm up 450 quid, but it's charged me 63 now in fees. But again, remember, we've banked 300 quid altogether on this as well. So there's 300 quid banked already on this one. So this one is actually 750 at the minute. And I think it was about 17 quid in fees. So we have 750 and we have about 80 quid in fees. Okay, so, and that's the idea. Glencore, 400 quid up to and made 20 quid on fees as well. So Oxy is very good with their dividend. Oxy's dividend is extremely good. I had a big position and I made 50 or 60 quid on their fees. Do Naga charge less fees on CFDs? Look, it comes down to which asset. It literally comes down to which asset. They all have cheaper or more expensive nuances. So Naga are cheaper for trading crypto. As far as I know, they're cheaper for trading and trading the likes of FX. Whereas if you're trading a CFD on a stock, eToro may be a fractional cheaper. So it depends on the spread on gold on eToro is absolutely, the rollover fees on gold and oil is absolutely extortionate on the likes of eToro, whereas on Naga, it's the same as their FX charges. It's really low. So the thing is that there are some things will go for you, some things will go against you. You just have to work out which one you're going to use for what, and then go from there, or just stick to one of them, either or. So if you're trading the likes of gold and oil and stuff like that there, yeah, Naga will save you a bucket load of money if you're trading the likes of those as a CFD instead of an underlying asset. Let's have a quick look at this bad boy. A lot of very happy people over the last most of the CFDs I'll ever run end up a one-to-one because of the fees and charges. But then the idea of that, Kathy, is then if you know this already, close them on a 2-to-1 or 3-to-1. Let them, close them, get rid of them, and then look for a new entry rather than letting them run. So sort of make sure that's where your spreadsheet, all that stuff comes into play. Make sure you're putting that in there. Make sure you're correlating that. So in your spreadsheet, put an extra column, actual fees. So yeah, you may have hit a 3-to-1, but when you put the fees and everything involved, how much the actual trade was now. So you're better off then closing at 3-to-1 and taking profit or letting it run, so on and so forth. So with my ones, absolutely not. It is, if they continue to trend, look, there you will make much more money holding on to it as a CFD than you will closing it, getting in and getting out. It's also easier to scale into positions. But again, that's where the fees come into play. You have to work out which one works best for you. Now, this one was very, very similar to Tesla. This one was very similar to Tesla. So we had a big rock hard level here. I'm going to make that level a little bit fatter. So we had a big rock hard level up here at the 64,600, was it? 64,600. And as we can see here from the analysis that we talked about, I talked to you guys, did we expect it to come up here, hit its head and come back down? Or did we expect it to smash through? And if memory serves me right, you guys expected it to smash through. Okay, now, question. Did this smash through the 44,000 level? So 44,600, did it smash through that level? So at that point, is that smashed through that level? And the level is this one here. So just so anyone who is, so that's the level. Did this smash through that level? Yes or no? No, it stroked it. Alistair, that made me laugh. So yes or no, people, come on, everyone get off the fence. This is where this lets me know whether you are seeing things correctly or not. Okay. Well, Ashley, you said it closed below. Well, look, the close here on that bar is above it. So that bar closed above it. Now, I know you're talking about the second bar. I understand that. I understand you're talking about that second bar, but it closed above it. Then someone said a false breakout. Well, that's a different question. That wasn't what was asked. That wasn't what was asked. So everyone expected this to smash through it. Okay, so I'm going to show you what a smash through a level looks like. For the people out there who are new and you have no idea what a smash through a level looks like. I know I have it there somewhere. This is what a smash through a level looks like. See that there? That's smash through a level. This is not. Okay, that's the difference between breaking through a level and retesting. Okay, now this particular scenario, we would call this a false breakout. Okay, or a fake out. False breakout or a fake out. So that's what that is called here. Now, the problem is that anyone who had a long above this level and expected the market to run, they've now been triggered in and it's now dropped down. The only good news is that you the market is now an underlying asset. So unless you're in other countries, you can't trade this as a CFD. But it has dropped. And now it started flittering on the way up again. So, but again, we don't really want to see it just take off and not giving us an opportunity to get in. So we had a drop down here and this was an opportunity to get in. So were we correct that it bounced here? Absolutely, we were spot on that it bounced here. Were we correct here on Tesla? Nope, it didn't bounce, it smashed through it. So as you can see here, out of the two that were at similar levels and were almost identical, they had two very different outcomes. Now, one of the main reasons of the different outcome is because this is an actual stock. This is an active, they have revenue, you can see that they've done better than the last quarter, so on and so forth. Okay, so that's why this took off here. Whereas Bitcoin, it broke that level. And you will have people who have taken profit on this. You have a lot of profit taking at that level. It broke through it, and you will also have shorts at that level. That's what's happened there. Okay, so the short sellers have jumped in and have driven it down a little bit. Now, to what end? I don't know. I still expect it to break here, and I still expect it to go up and retest. Do I expect it to come the whole way back down to here? Probably not. Probably not, but I would not be surprised if that happens. If it come down to here, that would be the ideal scenario. I'd love to see it come back down here, because then once it got to this level here, there'd be much more momentum, there'd be much more people buying it, people would be much more bullish on it, okay? Rather than this movements here to the upside. So ideally, I'd like it to come back to here and then look to buy up some more. But at the present moment, we've had that bounce, we've had this pullback. So just make sure you're aware of the actual a break versus a retest, or a breakout versus a sort of a fake out or a false breakout. And that's what that is. Now, again, it may continue and go through it now at the second attempt, the first attempt here. And that's the difference between trading. There's loads of different ways to anticipate the market, to understand the market. And without seeing it and understanding it and actually knowing differences, for instance, with the dividend, I assumed you guys knew this. I assumed you knew this. That was fairly big and fairly basic stuff. See you later, Thomas. But I thought that was something that you guys knew. But obviously you didn't. You also get a dividend on the likes of the Nasdaq, S&P, and Dow. You get it actually once a year, even on the indices. You get it once a year. Again, it's something small, but you do get it if you hold on to it. Okay, so little things like this. I'm assuming you guys know that. Why? Because I speak to you guys twice a week, so I assume that you guys all know this. Sometimes I speak to you guys 3 times a week. So, but make sure and you say these things, because I don't know. But that's the difference between a breakout, which is here, and an actual fake out, which is this. Now, a general fake out, the sellers jump in. So we'd expect the sellers to jump downward. We expect the market to come down and then have another run at this. That is the general rule of thumb with a fake out, and that the buyers tried to push it up and then the sellers took control. But again, we're not talking about underlying asset, but it's traded like an underlying asset, which means then that in the likes of this country, you can only buy it, which means then that you have more pressure to the upside just by virtue of this is an underlying asset, rather than if this was, say, the FX market, that the short sellers, there'd be more people short selling this because we can trade it both ways. No, you can't sell it on eToro. So what you have to do is if you want to short sell this, you have to open up NAGA if you want to short it, or some of the other platforms that you can short it. So that's the problem. And that's the problem with the likes of this. Well, it's not the problem. It's the good thing that if this had been the FX market, I would 100% expect it to come back to here. Yes. So the price, this short selling here is one. It is people taking profit. Okay, so we have profit taking. I'm pretty sure a lot of people would have had the 64,000 level. So that was it. So you'll have people who are taking profit. So that means there's not as many people bullish on it anymore. Also, then you will have people outside of the US shorting it. You also, has anyone heard of the futures contract? So the futures contract had opened up a couple of days ago as well, which means theoretically you can open up a futures contract and short this now. Now, I don't know whether that futures contract is on eToro. I actually haven't checked it. It's not something that I'll be looking to do. But theoretically, because of the futures contract, you can now actually short it, which means then, yes, it is fake money, fake movement, but it still gets priced into the actual asset. So example, Shane took profit at 64492. 64492. Well, you didn't leave a whole lot of room for error on that, Shane, did you? What was it? 200 quid till they hit the record high. Didn't leave a whole lot of room for error. Yeah, it was close. Now, because it faked out, there was no problem. But the thing with this is a lot of times, see this high here, that's as high as it gets, and then it drops. And then you're annoyed, and then it comes back down here, and you go, oh, should I jump out of it? Should I jump out of it? Okay. So the idea would be is we would love it to come back to here. If it comes back to here, then that would be another buy signal. That would be another buy signal. We'd expect it to go back up. And then if it continued coming down to here, I would scale into another position. Okay, but time will tell what's happening on this. Shiba smashed through. Yeah, absolutely. Shiba smashed through. Shiba smashed through. It's record high again. So it's the one that I didn't invest in, but it's the one that has the most, what would you call it? The most hype about it at the moment. There's probably more hype around Shiba at the moment than there is Bitcoin. In the sense that this is absolutely mental. Anyone trading this needs their head tested. And if you have a position on this, you need to go see a doctor. Why? Well, actually, you don't need to go see a doctor. You need to go see an electrician. Why? Because you're wired wrong. If you jumped in anywhere around here, look at, you're absolutely gambling. This is not something that we should be looking to trade. You may have made profit. You may have made profit. If you bought it somewhere around here, absolutely, I can 100% understand that. It bounced at this level, bounced there again, bounced there, bounced. I can 100% see that. Absolutely. If you bought it somewhere around here, makes sense. If you bought it anywhere along this bull run here, or anywhere along this run here, you need to go see an electrician, because you are definitely wired wrong. This is not how you make money trading. You're jumping in on fear of missing out. You may have made money this time, but you will get burnt doing that. You will lose money doing that. Let the market structure sort it out. Was it Sloan, is it? RS? That also had a nice jump. So this is how we trade. See the structure, the wedge shape going up, the high. This is trading. This is how we invest. We see the structure setting up, and then we trade it. Not the last one. Not the last one. The last one is literally you're jumping in on fear of missing out. Okay, this one has now gone up to a little record high. Let's see this. And no one actually laughed at my joke. I'm a little bit annoyed now at that. I put the little joke that you want to go see a doctor. And I was like, no, you don't want to see a doctor. You need to go see an electrician because you're wired wrong. No one even laughed at it. I thought that was funny. God. No, don't be laughing at it now. No, you can't laugh at it now. No, don't be silly. I chuckled loudly here. Okay, thanks, Alistair. So this is at a double top here. Now let's see if that breaks out of this ceiling, or will we come back into this area here again? Let's see if it'll come back into this area. So it's not something I'm looking to trade at the moment. Yeah. Actually, I'm still in shock at how funny it was. Yeah, right. So if it comes back to here, there's a potential trade on it. If we look at Matic, yeah, so for this, it has to break and retest. On this particular one, for us to be looking at this has to break and retest for us to look to trade this. Now, when I say trade, I don't necessarily mean trade it. I mean invest in it as well. I mean invest when I say trade. So Okay, so it comes back up and then back down to here. That's where I'm looking to trade or invest in it. So this one is running nicely for us now as well. The good old Dodge had a little bit of a jump the other day. And it is pretty much going nowhere at the minute. So I have bought a couple little positions a little bit lower to try to bring down my average on this. So we're about here now at the minute. If this pops up and gets about that area, that should be a nice little level. But again, it's one of these ones that's sort of fallen from grace again, hasn't it? It's one of these ones that's sort of fallen from grace. Can I look at Facebook, please? Yes, Kathy, because you said please, I will look at it. FB, Facebook. So we have this trend line. Now I'm going to get rid of this because this is not valid anymore. Remove. So we had that breakout there. So we have this trend line coming up along. We're in this area. We're in this vicinity. Okay. Then if we zoom in, we actually have a small horizontal level here. Bounce, bounce. This is also bounced, bounced. And then today, or yesterday, it gapped down and then popped up. Today is slightly higher. It's open slightly higher. So is this a trade that we should be taking? Is this an area or a zone that we should be taking a trade on? Yes or no? Okay, so someone said yes, good earnings. So let's have a look at the earnings. Okay, so if we look at Q4 2020, it was 21% up. If we look at Q1 2021, we had 40% up. If we look at Q2 2021, we had 18% up. If we look at earnings Q3 2021, we have 1% up, so flat. So was that good earnings for Facebook? Yes or no? So a couple of responses now. One, not good. Nope. No way. Nope. So in this particular moment in time, this is not good earnings. So it's higher than expected, but not good compared to the previous Q results. But again, it doesn't matter whether it's slightly below or slightly above. This is not good earnings for them. From an investor perspective, this is not great. Okay, they've done exactly what they said they would do. They didn't perform any better. They didn't perform any worse. So would the earnings be put into my thinking? Absolutely not. No. Absolutely not. No. Okay, so the earnings is not put into my thought process with this whatsoever. So back to what we have in hand. So looking at this particular structure here, does this look like a CFD trade, or does this look like an underlying asset trade? And if we were taking a CFD, so just assume that we're taking the position for one. So just let me know one or two if it's underlying and a CFD, and then I'm just going to assume if it's a CFD, this would be the entry and the stop loss. Okay, so I want your answers, guys. So there's only two people after answering. Come on, get off the fence. That's the idea, guys. You give me your opinion, and then I will let you know whether it's correct or wrong. So we have, say, 5% here. So this go up 15. Okay, so if we were taking this as a CFD, the entry would be above yesterday's bar, and then the stop loss would be below here. So the general consensus is 60-40 CFD. Big fence, but look CFD. Well, I'm the same. I wouldn't be taking this trade, okay, because the structure is not correct here. Structure of it here is not correct. So that therefore means then I would not be taking this as a CFD trade. So for me, there's no CFD here. I would not be taking this as a CFD trade. We do have this very soft level. So there's 1, 2, 3, 4 touches there all along here. So we have sort of a small floor, but this is not a CFD trade I would take. If I was trading this, this would have to be an underlying asset. And I know that's not very sexy, but I would much rather wait for a phase 1 and a phase 2 and get in somewhere here as a CFD than trying to get this, get triggered out, and then goes up and then jump in here, which means then you're getting back the money you've just wasted here. And that would be that'd be my way of looking at this. So for me, Facebook is definitely not a CFD trade at the moment. I would be looking at that as an underlying if I was looking at it, but I'm not looking at it as an underlying asset either. I'm not trading that as an underlying asset either. Okay. So look, everyone, it's been an absolute pleasure. If you are watching this on the likes of YouTube or anywhere else, make sure you click like and subscribe. If you want to do my free training course, make sure you click on the link. But if you want to jump into the free chat room, make sure you jump in there as well. And thank you very much, everyone. It's been an absolute pleasure. Love seeing you every Tuesday, and I will see you all next Tuesday. Bye-bye.